Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Japanese trading houses are speeding up their efforts to shift away from coal and other fossil fuel assets amid a growing decarbonisation push worldwide and to match an ambitious pledge by government of becoming a carbon neutral by 2050. The move comes as the trading houses are rethinking their long-term strategies around upstream investment, Wood Mackenzie Asia Pacific Vice Chair Gavin Thompson said in a recent note. If 2020 was a year for the re-evaluation of future plans, then 2021 looks to be the year of implementation, he said.
Asian spot liquefied natural gas, LNG, prices fell for a third week as a warmer season approaches in the Northern Hemisphere, reducing the heating demand that sent prices to a historic high last month. The average LNG price for March delivery into Northeast Asia LNG was estimated at around $7.20 per million British thermal units, traders said. That's 80 cents lower than the previous week. Cargoes for April delivery were estimated at $6.60 per MMBTU, with spring in the Northern Hemisphere approaching after a cold spell and supply disruptions. That's about 5 times lower than the record high of $32.50 per MMBTU on January 13.
Moving on to the top news in the energy sector.
A drop in demand for liquefied natural gas, LNG, in Asia as temperatures rise is shifting cargo flows to Europe. Though this is not enough to ease the supply situation in that region, analysts from Goldman Sachs said in a note on Friday. Milder winter weather and the restart of 2 nuclear reactors in Japan have reduced the urgency to attract LNG supply into the Pacific Basin, driving North Asian LNG prices below levels needed to incentivize European reloads and U.S. marginal cargoes, they said. Asian spot prices LNG have dropped from a peak of $32.50 per million British thermal units in January to below $8 per MMBTU this week.
Oil prices rose about 1% on Friday, after hitting their highest in a year and closing in on $60 a barrel, supported by economic revival hopes and supply curbs by producer group OPEC and its allies. Oil was also supported as U.S. stock markets hit record highs on signs of progress toward more economic stimulus, while a U.S. jobs report confirmed the labor market was stabilizing. Brent crude ended the session up 50 cents, or 0.9%, at $59.34 after hitting its highest since February 20 at $59.79. U.S. crude CLC1 settled up 62 cents, or 1.1%, at $56.85, after reaching $57.29, its highest since January 22 last year. Next, we have the top news in metal markets. Indonesia will no longer permit mining waste to be disposed in the ocean to allay concerns about the environmental impact of processing nickel used in electric vehicle (EV) batteries, a government official and a corporate mining source said. The Southeast Asian nation, the world's biggest nickel producer, has not officially banned so-called deep-sea tailings (DST), but by not issuing new permits it could delay planned projects and complicate efforts to dispose of waste. Proponents of DST say it is cheaper and less harmful to pipe waste into the sea, especially on tropical islands where earthquakes or heavy rain limit storage, but critics says the impact of such marine disposal is poorly understood.
Gold rebounded above the $1,800 psychological level on Friday, helped by a retreat in the dollar and data showing slower than expected growth in U.S. employment underpinning the need for additional financial support. Spot gold climbed 1% to $1,810.26 per ounce by 1:58 p.m. Eastern Standard Time, after falling to its lowest since December 1 on Thursday. U.S. gold futures settled up 1.2% at $1,813. Gold continues to primarily take its lead from the dollar and we expect this to remain the case in the coming sessions, said Suki Cooper, analyst at Standard Chartered.
We will now look at the top news in the agricultural sector.
Rains in Brazil that have slowed harvesting and transportation of the 2020-2021 soybean crop will continue throughout February, causing potential disruptions in the world's largest producer and exporter of the oilseed, analysts said. The heavy rains, which can cause trouble for Brazil's truck-dependent soy shipping, may give an edge to soy farmers in rival exporters such as the United States. While Brazil's soy harvesting moves at the slowest pace in 10 years, vessels are lined up at ports such as Santos and Paranagua, which are expected to ship some 8.5 million tons of the soybeans this month, according to shipping schedules. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.